Joining us live right here on ET Now to talk about the numbers announced on the road ahead is Keki Mistry. Mr. Mistry, it's always a pleasure talking to you. Thank you so much for joining us. I just read out the headline numbers, but if there has been one trend across all the counters, it has been the cleanup of the balance sheet and the reduction in NPAs. So let's first talk about that, Mr. Mistry. How has that been?
See, NPA is just actually a number, a figure. What you need to really look at is the total value of stage 2 and stage 3 loans. And as I said, the total amount of stage 2 and stage 3 loans has actually declined because some of the stage 2 loans have moved into stage 3. There have not been too many addition to from stage 1 to stage 2 loans because the quarter has been good. The economic recovery has been very strong. Collection efficiency has gone up from, I think it was 98.3% last quarter. This quarter, the average is 98.9%. So collection efficiency is better. Therefore, logically, over a period of time, it will result in the stress in the real estate sector, in the construction finance book, getting lesser and lesser with the passage of time. Now, non-performing loan is an accounting number, 90 days outstanding. So that number can go up a little bit, can come down a little bit. But the important thing is to ensure that these are adequately provided. We actually carry a provision which is higher than what is required by regulation. Our total provision that we carry in the balance sheet now stands at 13,196 crores. And if we were to make a provision strictly in accordance with what RBI mandates in terms of period of default, then the provision that we will need to carry would have been 7,450 crores. So we have adequate provisioning, and hopefully with the passage of time, we will see further reduction in stage 2 and stage 3 loans, and that would mean that there would be more ease or more reduction in the level of provisioning going forward.
Fair point, Mr. Mistry, and thank you so much for that clarification as well, and how we should be looking at the number. I'd like to now talk to you about the road ahead as well. We are now in an era where it seems as if higher interest rates are going to become the norm. It's a matter of not if, but when. So if I could look at HDFC Limited's margins as well and the business at large, a lot of your loans are, of course, on floating rates. How will interest rate hikes, whenever that happens, impact business, impact the balance sheet?
See, I don't expect it to impact profits in any significant manner. We have been through so many quarters and so many years when interest rates have gone up in some quarter, come down in another quarter, and you've generally seen that our spreads and net interest margins have been maintained within a band of 2 or 3 basis points for spreads and maybe 10 or 15 basis points for net interest margin, which is frankly neither here nor there. What I had mentioned in the last quarter was that the spreads of 3.6% were on the higher side. Historically, our spreads used to be around 3.2, 3.3%, or even 3.1% at some points of time. And what I had said is that over a period of time, we would see spreads normalizing between what they used to be historically and high levels of spreads that we had in the second quarter and the first quarter. Now, we have seen right through the third quarter that notwithstanding the upward movement that we have seen in interest rates during the quarter, our net interest margin has been maintained at 3.6%. Would higher interest rates impact or improve the net interest margin? In a way, it does, because we have nearly 1,15,000 crores of shareholders' funds. And this 1,15,000 crores has obviously no accounting cost. And because there is no accounting cost and we continue to earn income on that amount, the higher the interest rate in the economy, the more interest we will earn on the shareholders' funds. So over a period of time, higher interest rates will actually contribute to higher net interest margin.
Right. Mr. Mistry, hi, morning. Just wanted to understand what has been the state in the quarter gone by of individual as well as non-individual segment. And if you could break it up, how things currently are and what's the visibility going forward?
So if we look at it on a balance sheet basis on 31st December, then 79% of our outstanding loans are individual loans, 9% are construction finance loans, 7% are lease rental discounting loans, and 5% are corporate loans. This is the balance sheet breakdown. So effectively 79% individual, 21% non-individual. Now, if we were to look at incremental growth during this quarter, for example, between October and December, we look at the the loan book outstanding on 30th September, the loan book outstanding on 31st December, and break up that increase between how much was contributed by individuals and how much by non-individuals. Then the ratio would be 94% individuals, 6% non-individuals, which means a significant portion of the increase in the loan book during the quarter came on individual loans. Now, in non-individual loans, we have, as I said, three categories. Corporate is relatively very small. The other two are lease rental discounting, which is 7%, and construction finance, which is 9%. Now, in a lease rental discounting loan, the disbursement can be made immediately, in the sense that when the customer applies to us, at that point of time, the property is ready, the property has already been rented out, rent flows are coming in from the tenant, and therefore it is possible to disburse the entire amount immediately. But when you look at a construction finance loan, the disbursement is spread over a longer time frame because the disbursement is linked to the construction. As the construction takes place, disbursements also have to take place. So a construction finance loan will be disbursed over a period of time, whereas a lease rental discounting loan will be disbursed quickly. And as I mentioned in the last quarter also, my sense is that we should end the year with a positive growth on the non-individual segment.
Sure. Mr. Mistry also wanted to understand really, exactly what's happening now when it comes to, just the growth projections going forward and how business has really been shaping up.
LCR is high because this was the first quarter when LCR became applicable, and we were not sure on one or two issues for which we have got subsequent clarification. So my sense is incrementally going forward, we would expect the level of excess liquidity that we carry in the balance sheet to slowly over a period of time start reducing. The total excess liquidity we carried was to the extent of 55,000 crores, which is about 120%. And the LCR that we are carrying is 120% against the requirement of 50%.
Again, okay, so that really is the LCR picture, but I also wanted to understand, whether or not excess liquidity in case of a normalization, while you're saying it's going to impact your profitability in a positive way, can it really help in margins too?
That in a way will have a positive impact on the net interest margin or a positive impact on the net interest income as we go forward, because we would reduce the level of excess liquidity that we are carrying.
Mr. Mistry, the street is fairly curious to know what the truth is when it comes to all of the chatter regarding the listing of HDFC Ergo. Would you like to put all of those that buzz to rest and give us any sort of clarity as to what the game plan is, the timeline is?
There is absolutely no plan in the pipeline. Ideally, we would, I think, a public issue for a company like this makes a lot of sense. But we have, as you know, a partner. Our partner in this business is Munich Re. And at the moment, we have not had any conversation with Munich Re regarding an IPO. So it is certainly not something which is imminent or something which is going to happen in the very near future. But we will have a discussion with Munich Re at an appropriate time and then take a joint decision on when, if and when to do the IPO.
All right, we'll let you go on that note. Appreciate your time, Mr. Mistry. Absolutely clarifying that as of now, there's no plan for the listing of HDFC Ergo and talking about the quarterly numbers.